Yes, we are live now. Uh, Hello, students, and welcome back to BankExamsToday.com. My name is Ramandeep Singh, and today I'm going to provide you five important questions, right? And today we are focusing on PNB SO, right? Today we are focusing on PNB SO, credit and risk manager exams. Okay, credit and risk manager exams. So let's start the session. And before starting the session, let me tell you, students, that I have a Telegram channel. One channel is Bank Exams Today, which is for all the exams, all other exams. But for Scale 2 and Scale 3 exams, I have created a separate channel, and I'll share the link to that separate channel in the description. You can just check the description and you can just follow me on Telegram. Let me just share the link to this video on my Telegram channel. Let me just share it. Okay, I have shared it. So, okay, we are live now. Okay, done. So, five important questions. Students, calculators are not allowed in the exams. Calculators are not allowed in the exam. So, the kind of question that will be asked would be regarding the interpretation of various methods, right? So, it is regarding the interpretation. That's what we are going to do today. Calculators are not allowed. Okay. So, let's move forward. If there is any doubt in your mind, you can always ask your doubts in the super chat. I'm there. So what is capital budgeting? Capital budgeting is a process of evaluating the profitability of an investment opportunity. Basically, there is an investment, right? Let's say investment A, investment B, whether this investment, in the year zero on the initial outlays, let's say 500 rupee, 500, let's say 500 crores, right? And then year 1, year 2, year 3, year 4, year 5, 5 year is a life, right? And then you are getting 100 rupee here, 100 here, 200 here, 200 here, and let's say 50 here. Okay. So, and another project is like comparable project, 600 is the outlay. And then in the next year, you are getting 200, 100, 200 here, 300 here, and let's say 100 here. Which project is profitable, right? There are various method, payback period method, in which no discounting is there. Obviously, see, there is a concept of interest होती है, ठीक है, पहले साल के बाद, ठीक है, let's say the discounting rate is 5%. The value of this 100 crores won't be same, right? After 1 year, the value of 100 crore won't be the same after 1 year. It won't be the same after 5 year. There is a discounting factor there because of inflation and various other factors. So you need to discount it. So if you are not considering discounting, that is payback period method. And if you are considering the discount rate, that is discounted payback period method. Okay. These are two important, methods for capital budgeting. And let's move on to the question number 1. Which of the following statements about NPV and IRR is least accurate? I am expecting that you have already done these topics from my course, right? I have already, uploaded the videos regarding the capital budgeting in my PNB SO credit and risk manager courses, right? And I have already covered NPV IRR. Which of the following statements about NPV IRR is least accurate? The NPV will be positive if IRR is less than cost of capital. Confusion is between C and D. NPV would be possible. See, if the IRR is less than the cost of capital, the result would be a negative NPV. That is very important. If IRR is less than cost of capital, the NPV would be less than, the NPV would be positive if IRR is if the IRR is less than cost of capital. If IRR is less than cost of capital, the result would be negative NPV. Okay. Let's move forward. Which of the following statements about payback period method is least accurate? See, students, take this example. Ram gave 1,000 rupees to John, and John returned the money by giving 60 rupee and then 40 rupee in 2 days. The payback period is 2 days. Okay, it is simple payback. The discounting is not considered, right? So that is payback period method. The time required to recover the original cost of an investment, that is payback period. Okay. So the payback period, it considers all the cash flow throughout the till that money is recovered. So which of the following statements are incorrect? The B is incorrect. Okay, B is incorrect. It considers the cash flow till the entire life. No, till the company, or that till the company recovers the initial investment. Till that period, it would be cash flows would be considered. Okay, कितने सालों तक पैसे रिकवर हो जाते हैं, beyond that nothing is considered. Which of the following statement is least accurate regarding the discounted payback period? Least accurate, I have already explained. In that payback period method, the discounting is added. The discounting का method जो है add कर दिया गया. Discounted period method is the time required to recover the original cost of investment from net cash flow, considering the time value of money. Obviously, the value of money goes on decreasing over the period of time, because in India and in general, there is inflation, right? In India, there is a general inflation of 3 to 4%, 4 to 5%, right? So over the period of time, that is the discounting factor. So that is added. So this discounted payback period is longer than the regular payback period. Okay? So for example, in the year 1, 2, 3, in the year 1, you were getting 100 rupee, 100 rupee, 100 rupee. So if the discounting is done 5%, so it would be 95. So obviously, zyada time it will take more time. So it takes, which of the statements are least accurate? So B is least accurate, because generally the discounted payback period is longer than simple payback period. Okay. NPV profiles of two projects will intersect. This one is important. The crossover rate. See, initial investment is 500 crores, let's say, and 2000 crore. Over the years, this is the cash flows from these are the cash flows from the project, right? And we can draw it here. We are drawing it here. So let's say this is the net present value, whatever the money that we get, extra money that we get, let's say whatever the cash flows are there minus the initial investment, we have plotted them here. So if the discount rate is 0 for the project 2, it is here. For the project 1, it is here. Okay, and it's project 2, it's project 1. So if there is 5% discounting, it will be like here. Okay, so the values would be here. If it is at 6%, there would be a crossover. At around 6%, there would be a crossover. The NPV would be same for both the projects, and then after that, the NPV of project 2 would be lower than project 1. So that intersection point is known as crossover rate. So the NPV profile of two projects would intersect at a discount rate that makes their net present value equal. I have already plotted that for you. I have already plotted here for you. That's what is crossover rate. Students, see, calculators are not allowed in the exam. Please note that. You need to understand the interpretations. That's all. No need to go through those lengthy practicals. No need to go through Khanjan and those difficult books. Prasanna Chandra. No need. You need to understand the interpretation. That is what expected from you. Why I am doing this lecture? To explain you the kind of questions that you are going to find in the exams. Calculators are not allowed, so you are not going to find such questions in the exam. These are the kind of questions that you are going to find in the exams. Okay, ये वो questions का type. ठीक है? If you are able to understand, then that's fine. If anyone is working in the bank, let me answer a doubt. That experience is counted. That is a common question. If somebody is working in a bank on a contract basis, would that experience be counted? See, if your employer is that particular bank, suppose you are working at SBI as a contractual employee. If your employer is SBI, then yes, you are eligible. That experience would be valid. So if you are, if you have been hired through third party vendor, then you are not eligible. Okay. Sanjeev only permanent. I don't know what Lucky is telling you, but but if your employer is that same bank and they hired you for 2 year, 3 year contract, sometime I have seen that 2 or 3 year contract, then that experience is valid. Okay. So is NBFC companies is PSU? No, NBFC are like Muthoot Finance, Manappuram Finance. These are NBFCs, right? So let's move forward. Kalsi Machinery is investing 400 million in a new industrial equipment. These are the kind of numericals you can find in the exam. The present value of the future after tax cash flow resulting from the equipment is 700 million. So the present value of future after tax cash flow is 700 million and Kalsi Machinery is investing 400 million. So they are making $300 million. Okay. And currently it has 200 million shares of common stock. Okay. Current market price of share is $36. Assuming this project is new information and independent of other expectation about the company, what is the theoretical effect of new equipment of Kalsi stock price? Theoretical. Obviously the market, the market has different ways of, reacting on things, right? Maybe the market is going to react in a very different way, but theoretically on the basis of book value, what would be the impact? So $700 is the cash flows, present value of cash flows. $400 million has been invested, so $300 had been made, and the number of shares is 200 million. Okay, so 300 million divided by 200 million shares are there. So $1.5 per million, $1.5 per share is the benefit that the company would get. So 36 is the present value of the shares, 1.5 in the book value terms. So $37.5 is, it is the new value of the share, new book value of the share, it is the current market price. We are doing it. I already told you, this is a theoretical effect, not the practical effect. The market can react in a totally different way. Maybe the market is so happy about this $300 million, income that the share price goes to like 45. Or maybe the market is not happy because other better opportunities were available. So market, pushed the price to $30. So that is possible, but we are talking about theoretical effect. Please remember, this is a theoretical effect. So 37.5 is the correct answer. So students, the goal of today's lecture was to present to you the kind of question that you can expect in the exam. Theoretical question, interpretation based questions. You are not going to find those lengthy numericals or lengthy practical. These are the kind of questions that you can find in the exam, and that's how I'm gonna teach you in my course on BankExamsToday.com PNB SO Credit Officer course. So if you are able to understand, the today's lecture, if you are able to understand the way I teach, you can join the full course on BankExamsToday.com. There will be video classes, notes, test series, chapter-wise quizzes, interview preparation, and focus would be definitely on the conceptual understanding, on the interpretation. So the link to join is available in the description. Just WhatsApp me. The doubts regarding that eligibility criteria I have already answered. Now it's time for you to do the preparations. List of students who cracked Scale 2, Scale 3 exam in the past: Bank of Maharashtra, RRBs, Bank of Baroda, Vijaya Bank, Bank of India. So from past, I guess 5 years, I'm teaching for Scale 2, Scale 3 level exams. So in case there is any doubt in your mind, you can always ask your doubts in the comments. And yes, follow my Telegram channel. I'm updating on a daily basis on the Telegram channel, and the PPT for this lecture, I'll be uploading this PPT on my Telegram channel that is specifically made for the Scale 2, Scale 3 exam. The link to that Telegram channel is also available in the description. The name of channel is RRBGBO. So this is the handle. Let me just tell you the handle of the Telegram channel. This is RRBGBO. My writing is very bad, but RRBGBO, this is the channel name. So subscribe to my YouTube channel and like this video and share this video with your friends. So that's all for today, students. Thank you and have a very, very nice day. Bye-bye.